Welcome to our weekly market analysis. This analysis is for September 21st, 2024. In our weekly analysis this week, we're going to look at what happened last week after over 4 years of we haven't had market interest rates dropping. So finally, Fed has decided to reduce the rates, and here we are. So we had the FOMC last Wednesday. We also had Bank of England, which decided to leave the rates the same at 5%, and Bank of Japan also has decided for now to leave it at 0.25, a quarter percent. So we will talk a little about FOMC, and that will bring us to next thing, that what was the reason for that 50 basis point, which as of the day before, it was a 50-50 chance that the Fed is going to go 50 basis point cut. And it was 100% that it would be a cut. So the question is, what do they know? And I think this upcoming week, with all the Fed speakers in full force out there, I think that would be important to pay attention for their words and the dot plots, what's happening. So is the inflation completely under control? And are we in a Goldilocks and a soft landing with a growth in a reasonable place and employment acceptable? Or is there a fear? Is there a reason that the Fed is thinking there's some more weakness coming, especially in employment? The idea is we're at 4.2%. The consensus is we could be at 4.4% end of the year. But is there a wave of unemployment's coming to the market, and the slowdown will be actually faster than the Fed is expecting? So that's what the market has to analyze. Right now, they were euphoric, obviously. They love to see that 50 basis point. And the other camp is, well, again, Fed not being ahead of curve. They should have dropped 25 basis point in July. So remember, the next Fed meeting is in November, which is after the presidential election. So the question is, what's going to happen? So again, I will pay attention to the Fed speakers, what they have to say. Also, it's end last week of September. So, well, we got the last full week, and then we have one day on Monday the following week. So we want to see how the markets are going to really digest. One of the things that we have to pay attention, we look at the technicals, we look at the fundamentals, and we look at what is happening with the economy, but order flow is very important. And that brings me to, used to be quadruple, but let's say triple witching Friday. And what has been happening with these options, obviously, you have to remember, we call it gamma squeeze. When the markets generally there's a positiveness, so investors buy the calls. Well, the other side is the professionals and institutions who pay those calls. So when they have to sell it, they're in a negative delta. So in order to compensate for that, to go to delta neutral, because these organizations, market makers, are not there to give the directions, they are there to just make money on the spread. So basically, they have to buy stocks. Now, when we have option expirations that we had on Friday, and you could see there was some internal volatility, they're done. That wave is over. So they don't have to buy stocks anymore. So now Monday comes, and there's that rollovers happening, and new initiation of options market. So I think that's important to understand. So we'll see if the wave, that the strength that we had last week will continue. The other thing you want to pay attention to is talking about inflation. We have the PCE, the core PCE, actually coming up next Friday. And also we want to see how about the strength of the economy and pay attention to GDP. We'll talk a little about that. We also, in lesson of the week, we look at the skew, and it has been the highest ever. So pay attention to that. I'll explain that. When we look at the trade and the stock of the week, under the trade of the week, we will look at the Palantir trade. Also, let me correct this. This is PayPal. Okay. We will look at the PayPal and the stocks, Groupon, Apple, Nvidia, Tesla, and an ETF. We will look at the regional bank ETF, what's going on with that. So again, what happened last week? We had the big news was obviously the Fed, FOMC, decided rather than dropping 0.25%, they decided to take the 50 basis. So we have gone from 5.25 to 5.5, all the way to 4.75 to 5. Also, we did have the retail sales, ex auto, they were softer than expected. So, and what we want to look at this coming week, as I mentioned, a few things you want to pay attention to. The final GDP quarter over quarter, which is the forecast is 2.9%. We see quite few members speaking, including on Thursday. Fed chair is going to speak at 9:20 New York time. So, but look, there's a lot of FOMC members will be speaking. Also, the ECB president, Lagarde, she will be speaking. So we want to pay attention what is happening in Europe. So the quite few speakers. Also, on Friday, again, we want to pay attention that the core PCE month over month. Well, we've been talking about this for quite a few weeks, and we've been talking about this now, rather than inverted yield curve, now we're getting steepening curve. And this is the highest it's been. So you can see the 2-year and 10-year spread now is in the positive 20 basis point. So the expectations have changed. And now for the first time in years, we are going to the steepening. We've been talking about that. So what kind of a market was it? Well, on Wednesday, we had a big, really volatile. After the numbers came in, they loved it, and they hated it, and they loved it. Then they had to sleep over it. We had to wait for the overseas. And Thursday, we had this great run. On Friday, as I mentioned, it's more of a triple witching. We had a little of digestion on Friday. So right now, what we see was a good week for everything, including metals and energy. So Dow was up 1.6%. We are at all-time high. As you can see, we did hit the all-time high on Friday at 42,063. NASDAQ was up almost 1.5%, still 3.75% below their July 10th highs. And S&P also hit its all-time high on Thursday at 57.13. It's at 57.02, up 1.36%. You can see it's very little below its all-time high. Gold, understandably, again, what happened with gold, with the rates coming down, it really favors gold. And we are not out of the wood with inflation yet. So it was up nicely, 1.4%. Copper was more of a technical again. We will see in the charts, up 2.5%. And crude oil also up almost 3%. Weaker dollar doesn't hurt these things, right? It helps. So as an average, the markets were up 1.49%. What you can see is the mid-cap growth was pretty strong. So, and then small caps traded favorably. But on Friday, they did have a little sell-off. So we want to pay attention to that. So we'll see what happens this week. Is this gonna the Friday was more of again order flow, or there's something about it after hitting on S&P and Dow hitting the 52 weeks high. The sentiment, of course, Wednesday, now we are back to very close to our 1-year bullish high at 50.8. And the bears have gone a little bit into hibernation now, so they're below that 31%. Now, not long ago, we were at fear, and now we are in greed from the CNN fear and greed. And interesting thing is that the Citigroup panic euphoria, you could see when we peaked in July, and after that, remember we had a correction. Now it's actually getting closer to, it is in the neutral zone, and we've been dropping on that one. So, but let's look at again, long-term fib, and we see, been looking at that 51.11. We see how nicely we held it. And since then, we've had a nice bounce from beginning of August. And then we went to our 261% and bounced. And then we are comfortably above our 8, 21, and 50-day moving average. And we will discuss this a little more. Also, in the shorter term fib, Fibonacci, we can see that this double top, now it was actually almost triple top, we did break above that. We did go out, and it's offering us a support. So the question is, again, let's see what happens this Monday and Tuesday. Will we hold it? And then the next potential target could be 5,816. But right now we are holding that zone. If we break it, then we can go all the way to the 76.8% zone. So as far as the Bollinger Band, you see we were narrowing on Bollinger Bands. Now it's trying to open up. We did touch the upper edge. We are over 18 days, and we are over 100 days. We are embedded. MACD is positive, so there's a lot of positiveness. So the question is, again, I'm looking at the order flow, whether we will continue this. Even on a weekly basis, we had broken nicely above that 18-week moving average, but we are touching that Bollinger Band, although the bands are narrowing. And as I said, we don't have really big things coming up. We have, obviously, there's a tension in the Middle East. I think a lot of times the markets just discount that. And then also the earnings season will be the next big thing in October. So we are above, and we are embedded in stochastics, although the MACD is actually, you can see, we will discuss it a little further, is coming down. Speaking of that, this is what has been happening. So we broke above our all-time high, and nicely, MACD did cross. The question we have is an RSI. You see this divergence. So we want to see, we had it here, as you can see, and and here actually, you see that there was a divergence. We did have some sell-off, but then we had this nice move, more of a rate caught expectation move, and now we want to see if this will continue. So the relative strength could, the RSI could continue going up. As far as, again, yeah, we talked about the weekly. So as far as a point and figure, we've been talking about this, and we talked about the triple top. We finally broke out. So you can see we did have a reversal, and now we have broken out. So that's the strength, and that happened on exactly the Fed day, the FOMC day. NASDAQ is away from, still not in its all-time high. We are overbought, and we did have a little consolidation. So Friday, we did have little digestions, although MACD is positive. We are over 118-day moving average. Russell also is telling us that, with all these rate cuts, they should be really the high flyers. We're still not in a 52 weeks high and all-time high. And we hit the Bollinger Band. So Friday, we had a nice sell-off, actually. So it's important to take that into consideration. And we are overbought, although MACD is positive. So when we look at As far as the NASDAQ and Russell, we see that we are in a positive, but we want to break out of this 484 zone. And as far as IWM, the same thing, we want to hit that 228 and break out. So, but we are positive, so you can see the reversal there. As far as Dow, all-time high, the Bollinger Bands are opening. We are embedded. MACD is positive, but we are hitting that Bollinger Band. But if it's opening, this could continue going higher. And the transportation, thanks to FedEx, and that's one thing we have to really take into consideration as far as the global growth, global GDP. Is that something we have to really pay attention? Is that something that could affect USA, or are we going to be next? So we could see that we went outside the Bollinger Band and came back. We are above the 18-day, and we just went overbought. And MACD is still positive, but about to cross. That's transportation. VIX still holding right around its support zone, about that 16 zone. We are oversold. MACD is flat to negative. So, but the Bollinger Bands have been really narrowing. As far as the yields, so the yields, I've been saying this, that really the treasuries have been guiding and doing the work of Fed, and we can see how they have been dropping. But after the announcements, actually, we've gone up. So the markets now came out of the embedded. They went oversold, but the momentum still negative. I mean, the momentum is in the negative side, but it's moving upwards. So, and MACD is about to cross. So we are in an important zone, in that 18-day zone. So we have to pay attention what the rates are telling us, and what they're telling us the next move for the Fed will be, because it looks like the markets are taking that 100 basis point cut, really cooked in the markets right now. And the same thing with the 10-year note. You can see now the momentum has turned down. MACD has crossed, and we are right on that 18-day moving average. The same thing on when we look at the weekly, we see that we got overbought. MACD is still positive. On the long term, though, we are above that 100-week moving average. You see, we've been hugging it, but the Bollinger Bands are about to open. So that's, in the long run, it looks positive. On a 30-year bonds, we actually broke below that 18-day moving average, and momentum is down. So when we look at the TLT, on the other hand, we're still positive, and we have ascending triple top breakout, and that happened September 6th, this couple of weeks ago. As far as the dollar, now the dollar, obviously expectation of the lower rates, it has been coming down. We've had that 100, my support zone, 99.744 to be exact, and it has been very close. The Bollinger Bands has created support. We are oversold. MACD is flat. So the Bollinger Bands are coming together. So this is consolidation. I think we are waiting to see what the Fed is going to do. What is the Euro or the ECB is going to do? So, but naturally, it has been weak. Even looking at the weekly side, you can see we are just about holding that support zone. So watch that carefully. We are embedded. MACD is negative. If we break this support, then basically that tells us, it will be commodities play. It will be international play. We want to watch the other currencies. As far as the euro, on the other hand, what we can see is basically we have a broken above that 18-day moving average. And basically, that's, again, we want to see what's going to happen with the ECB President Lagarde. We are overbought, and MACD is flat. Looking at gold, all-time high, still moving, embedded, MACD positive. The Bollinger Bands are opening after this really nice bottleneck, and now we are opening. So again, dollar, interest rates, and geopolitics, well, they all bode well. On a weekly basis, though, we got to be a little careful. We are above the Bollinger Band, but we still embedded, and MACD is positive. So we can see we had the triple top breakout on July 16th, and we continue August and September, and all-time high. Silver had been lagging behind, so it's looking good, embedded. MACD is up above 100, above 18 now, and you know, we are way below all-time high. It's, I think, 49.24, something like that. So basically, we still got a lot of room to go on that one. And copper, I think, was really technical bounce. You see, we were oversold. Now MACD has been positive. We broke above 18. We're still under 100-day moving average. And the Bollinger Bands, you got the upper edge of the Bollinger Bands. But when we look at the weekly, remember, we've been talking about the 100-week moving average, and it created that support. Except now, they said we're getting close to that 18-week moving average, but we have a nice divergence, and we see that now we are oversold, and MACD is about to cross. On a Bitcoin, more of a risk on, and what is happening, it's in its own world, but now we are hitting upper edge of Bollinger Band, overbought, and 100-day moving average. So you might see some profit taking on this one, although MACD has been flat and it's been to the positive. And last but not least is the crude oil. Remember, we've had this support, and you see how nicely this 64 area held, and we've had a nice bounce, and basically we have actually broken above the 18-day moving average. Now, expected move, I think it's important to pay attention, and this is how nicely what happened on, you will see the common theme with all the major indices. Look, on Thursday, we hit all-time high in S&P. Where? Upper edge of expected move. It was about $100. And triple witching comes. Now, everything is settled, and we close right under the upper edge of expected move. The same thing with NASDAQ. So I don't, a similar story. Even Russell, we had this big move, and where did we go? We go right on the upper edge of expected move. How about Dow? Right on the upper edge of expected move after hitting all-time high. Again, this is where you pay attention to, especially the indices, especially S&P, to the triple witching and order flow and settlements. We could see on the bonds, we actually in the lower edge, and then gold, look, all-time high, upper edge. Silver stayed right inside. Financials higher than their upper edge, and basically energy went outside and came back inside. So again, pay attention to these, and also the order flows and then expected moves. Thank you so much. We move on to our the second segment, which is emerging markets, and we will look at the lessons of the week. Thank you.